Good afternoon, everybody. Here we go. Sort of end of the week, end of the month. Okay, and it's been a long week and a long month and a long year, ladies and gentlemen. You might feel differently, but anyway, you're all welcome here for the daily market update here today for Friday, 29th of May. As always, for those of you who are completely new, this is just a daily market update I started during the time of lockdown, 20-25 minute sprint through what's been going on in the markets in the last 24 hours, a few sectors and stocks that might be of interest to you all, and also just a little look at what if anything might be setting up for this afternoon's US session. So it's going to be an interesting one because, as I said, it's a Friday session. It's also the end of the month as well. As always, all the information provided is for educational purposes only. Trading on margin carries a high level of risk, and you should be aware of all the risks associated with margin trading. Just letting the last few people here into the room, and well, I thought I'd start here on Wetherspoons, okay, who we looked at about I think it was about a week or so ago, wasn't it? But Tom, one of our regular members, he was mentioned it after yesterday's session. I thought I'd bring it back up again, so let's have a look at it. You know, it's done well. If you might remember, we talked about it. I said it might be a week or so ago, and you know, we're talking about actually how that kind of £10 had been a bit of a level there, a bit of level of resistance, and £8 had been a bit of level of support. Some people might have sort of wanted to think of it as a bit of an ascending triangle after a downtrend. But you can see this week has been a good week for JDW. Wetherspoons, okay. The weather's good. Everybody's getting bored of lockdown. People are just actually looking forward to going to a pub, whatever pub that might be. I'm sure that after a long week, you're thinking of a nice cold drink in the sun yourself, and clearly that has had an impact on people buying the shares of Wetherspoon. We've now filled that gap there we talked about there between what's that, about 11:30 and 11:80. All right, we've kind of filled that gap, and we're up at 12. All right, so we've gone, you know, if you think about that, in the last couple of weeks, we've gone from down near 8 to up to 12. There's a minuscule gap there, okay, well, about 1260 or so, maybe a bit more, and then, you know, and then you're back up towards this kind of zone here. All right, so that you can see there yourself. So it's it's definitely been a good couple of weeks for Wetherspoons. The sort of the bad publicity that they got at the start of COVID seems to have been washed away. Okay, washed away in a cold lager, and it's been, you know, happy times back. And you know, I can see that actually for the, you know, if the summer continues like this, after people have been locked down, people are going to be back in pubs. I know Wetherspoons have announced that, I think, is it they're employing two new staff per pub, and they have 875 pubs around there, and excuse me, that will just deal with basically managing, you know, kind of sanitization, you know, and managing people, making sure that they're socially distancing properly. So it's it's a case of it's been a good couple of weeks for Wetherspoons. Well done. So if you were bought into them, okay, thinking of that, well done to you. Well done, good skills indeed. So who else did I put in today? Oh yeah, so I thought I'd one or two social media things. So Mr. Trump yesterday made an announcement about you know, what he was going to do regarding social media, which he then of course announced on social media. He got his I think he had his nose put out of joint a little bit that Twitter started marking his tweets as you have to check for whether it's fake news or not. So undoubtedly they've rubbed him the wrong way, and he'll be doing something about that. But if you look at this at Twitter as, you know, as a chart, and as I always say to people new to us, you know, I don't consider myself an equity specialist. I'm just looking here at the charts and seeing what the price action is telling me, okay, and what can I see as primarily a momentum trader. It's but, you know, if you look at this, so Twitter's not been around for that long, okay, but it's been a pretty torrid. I mean, if you're a long-term investor, you've had a bit of a torrid run and a turn there, okay, from highs at 48 down to lows, okay, at 20. We can see, you know, we've had, you know, there's some pretty big gaps there, okay. There's been some, you know, big gaps there in its history, okay, and its short history as well. all right, in its short history. So, but we can see that, you know, from just being underneath 40 at the start of the year, dropped to 20, but you can see, you know, we put in that sort of double bottom that we've seen, and then we've effectively just been grinding our way up. Okay, grinding our way up, all right. And yes, you know, we've dropped you know, we've dropped a couple of dollars, $3 there or so over the last couple of days based on what's been said, but nonetheless, okay, Twitter has recovered okay, all right. This compared to maybe the other tech stocks have done better, but also it's you know, done better than a lot of the other shares that we've looked at over the last couple of months. And Twitter's a bit of lightning rod, isn't it? It's a bit Marmite. Okay, people either love it or hate it. You know, if you're in finance and trading, I have to say it is actually a really useful tool. You know, and it's actually where I would go myself to get, you know, updates on news more so than going to the media outlets. Okay, you know, I'm more likely to get a faster and more insightful sort of response to some market moves or an event than, you know, than I am off the media itself. So, you know, it serves a tool for us in trading, and yeah, as you can see, it's come back okay. But I will see as the consequences of what Mr. Trump's plan is, we shall see what actually impact that's likely to have on these particular companies. If we have a look at who did I put else did I put in Facebook. So there you go. It's another one. Facebook's a bit Marmite, isn't it? People either love it or hate it. You know, if you look at the kind of longer term weekly chart on Facebook, it has done well, and you know, you can say what you like about Facebook, but invariably, it's, as you can see from the price there, it's had a good war. Okay, from looking at those highs at 220, dropping to 140. Well, you know, we've up until the start of this week, we'd kind of hit new highs there. Okay, you know, that's some recovery there on Facebook, and it's no surprise. We look at, you know, if you just look at what's been going on in the Nasdaq, all right, the Nasdaq had been leading the way because, you know, lots of money was pouring into a few of those big tech stocks. I suppose, you know, if you're a big investor, you know, where else can you put your money? You know, where else can you put your money? Where else would you want to put your money? Where else would you feel safe putting your money at the moment in this in the world we are in at the moment? And so money is poured into those big tech stocks, okay, both from institutions, from even just from people, from central banks, okay, from even, you know, from sovereign wealth funds, okay, they've been pouring in, and you can see there, okay. And of course, there's lots of people who've been sat around for the last few months, you know, on furlough or not working, just sat around on Facebook, and invariably, you know, that's been profitable for Facebook as people just mindlessly clicking on Facebook ads and buying stuff they don't really need because out of just boredom. So yeah, Facebook have had a good war, but, you know, once again, a bit like Twitter there, as comments about Mr. Trump's ideas and plans, we've dropped from like 240 down to 225. It might be interesting to see how that and Twitter trades in the pre-market and how this afternoon's session goes. We'll have a look at the indexes in a moment. But yeah, certainly it has been it's been a good war. All right, it's been a good war for Facebook, and I'd be looking at sort of saying, well, you know, is this area here okay? Those recent highs there about 224. Is that going to act as support now? Okay, will that act as support? You know, or has this been just a bit of a kind of final push false breakout? All right, remember we looked at Netflix, didn't we, the other day and stuff, and that had appeared to do pretty much similar to that. And if we look at Nasdaq as well, which we'll look at in a moment, Nasdaq has had a bit of a week of coming off its tops and stuff. So it's all linked, and we'll have a look at it. So who else have I got in for today? Oh yeah, so I've got here is TUI. All right, TUI Travel. So we have looked at aviation companies. Okay, we looked at Rolls-Royce. We've looked at Jets, the ETF for the aviation sector. Okay, it was all pretty torrid, but I said at the start of the week that, you know, maybe there's a bit of a relief rally. Okay, there's a hope rally in play, and people as countries lift their bans and as people start to go back out and demand starts to return, maybe that has an impact. And this is kind of an interesting one, TUI Travel. Okay, which, you know, I mean, you can see for yourself has had a pretty torrid time over the last few years. And if you recall, I think it's TUI, people, you can please correct me if I am wrong, is that TUI were the ones who pretty much bought out parts of the Thomas Cook when they collapsed. Okay, so they've taken that on board just in time for an absolute, you know, biggest post World War II collapse in travel demand. But you know, but you can see how that how the price there kind of just collapsed its way down there, right, and just above, what's that, about 250? Okay, just as holding as a bit of a level of support. You know, we all thought we'd have a bit of a descending triangle, and this is the thing with descending triangles, is, you know, if it doesn't break one way, it'll pop the other. And so from being just, you know, from being the sort of last week just under 3, you know, we actually popped up to hit £6 there. Okay, now admittedly we've come back a bit, you know, a fair bit. So you have to wonder, is this just, as I said, a bit of a relief rally? We've been talking about it coming, and even in the travel industry. So I was chatting to a friend of mine yesterday who's a good long-term investor, and, you know, he has TUI, you know, shares, and as he said, you know, it's a German company. Even though it's listed in the UK, people think it's actually a German company. German companies were, you know, effectively, you know, they were supported, bailed out by Miss Merkel, and they'll be getting support, okay, and certainly in kind of like the travel industry and stuff, you know, undoubtedly that will be getting some form of support to help keep it out of trouble, and maybe that is a reflection of that kind of share price jump that we see there. If you look at some of the, you know, I think you look at a couple of the news, I think Spain has announced that they'll be pretty much open for tourism from, is it start of July, I think. So, you know, if you think about it, the Spanish economy wasn't doing very well this year anyway. For them to have missed out on a whole summer of no tourism would be just, it would just be catastrophic, I think, for Spain at the moment. So, you know, and we've discussed this before a few times. The question becomes, well, who's going to travel? You know, my own view is that everybody has a price. If you offer people cheap enough holidays, you know, they'll take them. If they've been cooped up for a few months, I can see youngsters taking them because they feel that the risk of them, you know, gaining the you know, the COVID or anything are very small, and that's a risk they're probably prepared to take if the price is right. So so maybe that's what will help. Maybe that's what will help, you know, bail out some of these travel companies. We shall see over this summer. You know, it'll be interesting to see. So Aruna says apparently Portugal and the UK are going to have an air gateway. So right, well, that's yeah, that wouldn't surprise me. I could see the Portuguese doing whatever they want or whatever they can to try and encourage to do in that air gateway. Aruna says that would be, I mean, there's no need to quarantine. So that's interesting, isn't it? That's I think they'll find solutions to it, because those southern Mediterranean countries, they desperately need, you know, the tourism dollar. So they will do whatever it takes to basically encourage people back. So yeah, I think there'll be all sorts of solutions that will come into play over the next couple of weeks. And talking about that, you know, I thought I'd have a look at a bit of a competitor of TUI, but in a different way. So this is On the Beach Group. I think they trade on the AIM, okay, market. I've used them myself years ago, and sort of like, you know, for kind of cheap last minute holidays and stuff. So, but the kind of interesting thing about these guys is that it's a completely online operation. I'm sure you've probably been bombarded by their either their emails, their adverts, or on their Facebook, okay, adverts. But also, you know, I was being explained about how they, in terms of their managing their revenues, managing funds, they don't release when you book a holiday with them, okay, and pay a deposit, pay a holiday. It's not until the complete payment is taken from the client that money is released back into the business. The effectively, when you're taking deposits and etc., part payments, so that all goes into segregation. The company doesn't get it and stuff. So they are actually pretty keen. They run pretty keenly, okay, in terms of how they're lean and keen. All right, in terms of their operations, they're not, you know, they're certainly not splashing the cash elsewhere and stuff. And maybe that will have helped them, allow them to basically to survive where other, let's say, older flabby operators might struggle. But we can see here, okay, you know, it's kind of, you know, a bit of a range there, isn't it? Really, bit of a range there. Okay, start of the year, just £5, right, down to 120. But you know, we had that nice double bottom there, and then it's effectively come up. It was just under, I'll be saying just under 3. Okay, and what we've seen is, you know, in the last day or two, it's popped above 3. I guess we had a bit of a drop down there. Okay, this later on this week's morning. but I'll be interested to see, you know, could this close itself above could it close itself above like 3? Okay, then you're looking at, well, you know, your next target would be back up above these areas here. Okay, that's what I'll be looking at in terms of if this is going to continue to sort of progress. So yeah, take a little bit of a look at that. So there you go, some stocks for you to look at. I hope you found that interesting. As always, if there's something you want me to have a look at, just drop me a note or give me a suggestion. I'm quite happy to do it. As I say, I'm not an equity specialist, but I think it's fascinating to look at different stocks and sectors. Keeps us all on our toes. And let's have a little look at the main chart, shall we? Okay, so let's just hang across there. Excellent. Okay, so hopefully you can also see the slides. Okay, you can all hear the voice. Okay, so we've got a bit of this is the US indices, as always, hourly charts, the Dow, the Russell, the S&P 500 and the NASDAQ. So we've got a bit of an interesting afternoon. So we've got a bit of Canadian US numbers coming out there. Okay, so some big numbers there to come out and watch on. We've also got Mr. Powell speaking. So of course markets are going to be really keen. I think he speaks about 4 o'clock-ish. But interestingly, we are also going to have, Trump is going to supposedly make a commentary about Hong Kong, okay, and in particular, perhaps removing Hong Kong's a sort of privileged status that it has had, and that will have a knock-on impact because China does an awful lot of its dollar trading through Hong Kong, and if if Hong Kong is suddenly squeezed as a financial center, that will have a knock-on impact there as well. So clearly, Mr. Trump was watching my piece yesterday where we talked about Hong Kong and the Hang Seng Index. Clearly thought, yeah, well, this is on something here. I need to say something about that, and has decided to have say a few comments about it this afternoon. So fair enough. I don't blame you there, Mr. Trump. So, but kind of interesting. If you remember what we talked about yesterday was how I thought NASDAQ had been kind of leading the market. It's been leading the markets higher. All right, but also, from this double top here, it also kind of led markets down as well. But we had weirdly Nasdaq actually it had a bit of a sprint yesterday afternoon before selling off. And if we look at the other indexes there, okay. Yesterday they led lower, didn't they? The Nasdaq, we had like nice sort of kind of triple tops there, right, on the Dow, finishing with the kind of bearish engulfing key reversal after the unemployment claims and other numbers, and you can see that basically price sold off, and it's in a block now, right, just waiting for this afternoon's numbers here. Okay, so you can see that was pretty similar. The Russell was the same. Okay, kind of nice triple top there before rolling over, and the S&P 500 was a bit of a messy. It had a double top followed by a little kind of final push, right, just before it rolled over and dropped. But you can see they're all in a bit of a block there. So remember what we've got today, as I said, is we've got Friday sessions, so we're always interested to see how Friday sessions open and how they end, and also it means how the week ends, but also increasingly it'll be interesting how the month ends. Okay, so all of those, there's going to be flows. There's been flows all morning, okay, but there will also be month-end flows this afternoon. So just be wary about that. Keep your eye on that. So to see how that kind of plays out, it could be a rather eventful afternoon for the US indices. European indices, yeah, it's there's nothing. I don't really see anything really drastically exciting there. Okay, yep, the kind of electronic contract sold off a bit like the American. This is the DAX here, but this morning has been a little bit of a sideways move. Okay, so people settling up, all right, people working out how they've done for the month, and even the FTSE, FTSE had a bit of a strange one yesterday. This morning has been effectively, you'd say there's a bit of a bearish bias there, but it's still not exactly very exciting. But once again, it's going to be a case of if you think last week we were looking at weekly closes above certain levels, you're going to be looking at here okay, on the monthly chart, what you're going to be looking at as well is the FTSE going to close above 6,000 on the monthly level. Is it going to manage to do it, okay, for the second week running above on the weekly level? Okay, is this going to give us something? Are we going to finish the week strong on the kind of the daily chart? Okay, still catering above 6,000. It's we shall wait and see what happens over the next couple of hours there, and that's the same stories for. It's the same stories for the DAX, as we said. It's had a big bump up there, okay, but yeah, is it going to be the second week above 11,000, all right, for it? So yeah, so it's not terribly exciting, but they're going to have an impact on what goes on this afternoon with the Americans. What is probably more of interest to us is some of the FX pairs. So yeah, here we go, dollar index, right? So has the levy broken? So here's the daily chart, dollar index. And you can see there, we've yesterday we were talking about pivoting around about 99, but bosh, we're already here, so we're at 98. Okay, as I speak here just before lunchtime, and interestingly, what I'm seeing is yesterday we stopped at the daily 200. All right, having finally bust the kind of 50. All right, we're at the 200 today. We've traded beneath it, but remember we've still got a lot of the session to go. That could change drastically depending upon what we what kind of news we get this afternoon. But you can see that has actually, that kind of dollar weakness has continued. That's the 4-hour chart, and 1-hour chart has been the same. All right, okay, that is just after the kind of the mess on sort of Wednesday, not really sure what it wanted to do. Thursday in the afternoon session just rolled, and even though we've kind of came towards the end of the session here, and I think bullish engulfing key reversal, it's just sliced all the way through it. It's just showing you how strong that kind of dollar sell-off's going on, which probably pleases Mr. Trump. All right, that pleases Mr. Trump. He wants effectively a weak dollar, but of course that has knock-on impacts, doesn't it, if there's a weak dollar? So if you look at Aussie dollar, all right, I thought here earlier in the week we might get a bit of a double top and a bit of a roll down, okay, a bit of profit taking, but you can see the 20-period moving average there is just acting as really strong dynamic support there, isn't it? Just like absolutely there, bosh. And it's actually, it might push, to new highs, to close to new highs there. And same Kiwi dollar, okay, I thought we might get a double top followed by a little bit of a profit taking, but it's not having it at all. Once again, that 20-period moving average is acting as a good bit of support. Euro dollar, all right, euro dollar is just flying, okay, so of course as the dollar index is collapsing, it's no surprise to see euro dollar flying. Will that be pleasing people? That's a good question, okay. Remember the sort of the European Union came out with their well, it depends whether you think it's 750 billion or 1.5 trillion, depending on who's you read or where the number comes from. And it's a case of that's the euro is strengthening, and I think we're going to get into a case of markets are going to want to basically or other currencies are going to want to try and devalue their currencies to make them more attractive for exports, but we'll see about that. Dollar CAD, which had broken down, I thought we might, just one second, I thought we might have a bit of a there you go, let's get the drawing tool on here. I thought we might have a little bit of a kind of a rally back up. That's not what I want to use. I thought we might have a bit of a rally back up, okay, back to this kind of level here that, we might get support turning to resistance, okay, before it turns over. But at the moment, presently, it doesn't even want to do that. It just wants to roll over and fall, okay, and that's just giving you a bit of an indication there of a dollar sentiment for this going into this particular session. Let's finish with sterling as always, okay, and see what happens here. So I've got the sterling set up here on the 4-hour charts, and here we go. Maybe it's happening already. Is that what I wanted to talk about was, it's been an interesting week for pound against dollar. All right, it's just effectively, it's just been basically, this is the week, all right, it's just been batting back and forth. But, what I was looking at is on the 4-hour chart, price is just squeezed here between the 50 and the 200, all right, that's what I'm looking at. And you've got to look at, well, where are we going? We tapped the low of April, and now you've got to look at, well, is this a case of is it going to break, come back, test, and go? Is that going to be just an indication of more kind of dollar weakness, which is not necessarily about sterling strength, although I'd suggest there's a hint of it as the economy reopens. but that's what I'm looking at pound dollar. And if I look at pound yen I see is doing pretty similar. Okay, not as clear as thing, but it's still it's prices squeezed between the 50 and the 200. All right, so, you know, there's kind of, oops, it's just a terrible drawing there. It's just squeezed between there. Okay, and it's like it's waiting to pop out of there. Now maybe it doesn't happen today. Maybe kind of month end flows, just does nothing. But then we start next month and bosh, off it shoots. So we're just watching that over the next couple of session. Euro sterling said yesterday, didn't I, that 90 would act as it would drag it up there. Okay, and yes, and not only did it get up there, but it's shot past it. But now you've got to look at, is that a case of is that you know, a case of are we going to get like railroad tracks here? Okay, we're going to get like an absolute just false breakout here and roll away. Okay, so yeah, watch that for today and going into the start of next week as well. There you go, ladies and gentlemen. That was a bit of a flying. Yeah, of course, Mike wants euro sterling to weaken considerably. You know, we're all rooting for you, Mike. We all want that French chateau of yours to be cheaper and cheaper. But unfortunately, I don't have that much influence over euro sterling rates. But we'll all keep an eye on it. Anyway, there you go, ladies and gentlemen. I hope you found that useful. As I said, it's a Friday afternoon session. I'm always curious to see how Friday markets open, but more importantly, how they close, especially when it's the end of the week, but also the end of the month. So don't be surprised if there's a few shenanigans, especially with a few of those big news, and also with both Trump and Powell speaking. So have yourselves a great weekend, ladies and gentlemen. Enjoy this fine weather, and I will see you on Monday lunchtime. So trade well, and I'll speak to you soon. Cheers.